Hello, hello. Yo guys, welcome to today's video. So today we are going to do a video on indications. How do I go about indications? So first, you need to realize that for you to see an indication, you need to master levels from a very personal perspective. So the first thing when you enter into the market is you look for you look for levels to understand trends. Okay, that is extremely easy to understand, my niggas. So that is what you do first. So what are levels? Levels are, if you look at your trading view, mine have modified a little bit. If you look at your trading view or your MT5, you realize that there are only two buttons in your trading view or your MT5 that you can execute directly. And that is what I normally tell people. If you look at right above here for your trading view, which is noted there, you'll see a buy button and a sell button. So levels are areas where buyers and sellers are situated. Now, I'll use the eclipse to signify sellers and the arrow to signify buyers. So at this area, we have sellers. 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 Now that you are able to identify sellers in the 4-hour time frame, now you need to identify buyers. At this level, we have buyers. At this level, we have no level in the same area. Yeah? At this level, we have buyers, and at that level, we have buyers. Now, the second question that you need to ask yourself is, what are buyers doing against sellers, or what are sellers doing against buyers? In this situation, the fucking sellers are being broken out against by buyers, which means that buyers are in full control. You can clearly see buyers entered heavily in this level to push price above the sellers, to break above the level of sellers. Then the sellers then the sellers came into the picture, pushed price back above to the level where they were. This is what happens in the market. Whenever buyers break above a level of sellers, sellers push price back to that level, to the level where they were first. Then they buy together with buyers to support the fucking trend. Understood? Yeah, so they support the trend and then they push price back up to the level of fucking sellers. And then the sellers again push price, because it's not all sellers that are going to get out of the trade at this level. So some sellers are going to get out of the trade at this level, which means that immediately price is pushed down to where they were recently. Then the sellers who are here who got out of this trade, who got out of the trades maybe from being buyers at this level, who got out of their trades from this area, they are going to buy back to the level where they were previously, so they can push price to the upside. That is something that is simple and it's need to understand. So that is a pattern, that is the bloodline of the market. So in this situation, it is very, very clear that buyers are buying into sellers and sellers are selling into sellers to where they were. You can clearly see that sellers don't have any power over buyers. If by any chance sellers sell into buyers and break beneath them, now what you have is a market structure shift, which means that the market, you want to mark that level where sellers broke out of the buyers, which means that sellers are getting control over the buyers. Let me modify this arrow to this level. Then you need to watch how price is going to behave. If by any chance sellers reach that level where they were, and then they again sell into buyers and break beneath the recent buyers to make a low, then buyers buy into buyers for sellers to sell into buyers, which means that now sellers are gaining control over the market. Now that is what we call a reversal. And if you clearly see, this is what we call a downtrend. A downtrend is where the sellers are, are heavily influencing and defeating buyers. But if the price is, if the sellers are not beating the buyers, it means that who is in control? The buyers. So in this situation, the sellers are beating the buyers. The sellers the sellers at this level the sellers at this level are beating the buyer at this level. Sellers at this level are beating the buyer at this level, which means they have control. And if again the buyers at this level buy into sellers and break above that level, it means that buyers are regaining control. So why do you wait for buyers? We wait for sellers to sell into their level because they now have no influence over the market. Then we we'll see price again pushing back above the levels to form structure. That is how the market works. Now, that is an understanding on levels. If you understand levels, you understand trends. My main focus today was to show you guys something in the strategy known as indication. Now, strategy is the third thing in my four-step process. The first thing is trends combined with levels, because trend combined with level is haziwezi achanishwa, they are inseparable. If you understand levels, you understand trends. If you're looking for levels, you're looking for trends. So the third thing is indication. What is indication? No, the third thing is strategy. Let me delete. Let me show you guys something. Put that there. Let me put right that there. Oh, fuck. Bravo. Now. The first thing is levels. Levels plus trends. Levels plus trends. This is so you need to understand that. Then, okay, let me copy this down here, then delete it. Number one, number two, so we add another dot there. Yeah, and then the third thing is strategy. Into bracket, let me call it ICC. So we are going to work on the I, isn't it? We are going to work on the I, isn't it? We are going to work on the I today. The I is the ICC. So this I, and I'm going to give you examples from the market, is the indication. So what happens? Assuming that price is trending upwards, buyers are breaking into levels. Buyers are breaking into level of sellers, breaking above them, then sellers are selling to are selling price to where they were. Buyers are breaking into sellers again, then sellers are selling back back to where they were, and the fucking pattern continues. I'm rich, man. I knew it. I'm sorry for that, guys. In this situation, it's very clear that sellers are weak. Who is strong? Buyers. So let's assume price has reached that level. So in this situation, you need to mark the levels. I'm going to show you this very soon. And I'm going to show you both in the bullish market and the bearish market. So in this situation, we mark the first level of sellers. Guys, please bear with my trading view. So buyers have broke into level of sellers to give us an indication. So an indication is price movement above a level. So in this situation, this is the indication. It shows us how far price wants to go. That is the indication. Now we want to spot multiple indication. Let us mark the second level of sellers. We want to see price movement into and above that level. So this is the indication. That is the indication. So this is another level. We are having sellers around here. We mark that level of sellers. We want to see price movement above that level. So let us mark the next level of sellers. Now this is the indication showing us how far price wants to go above that area, above this level of sellers, these levels of sellers that are marking. And the pattern continues. Now you may want to ask yourself, what is the importance of the indication? Number one, indication shows where price wants to go, gives TP levels. Simple, 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 bruv, simple. But it's not in all cases that use indications to give you take profit levels, especially if you are using ICC in the higher time frames. But let us focus on the indication part of things. So now we want to go into the charts and try to spot indications in the market. So the first thing that we want to see in the forward time frame is we want to see a level. Now I want to take, if you're not able to notice this straight away, you just take this horizontal ray and you mark levels that are clear. So this is a level of sellers, buyers. These buyers broke out of this level of sellers, which means it's a significant low. Then what happened? Sellers sold into buyers and broke beneath them. Then buyers pushed price back above where they were for sellers to take control. So in this situation, what we have around here, not around, what you have here is an indication. We have an indication that price is going bearish, and this is the indication. So we want to zoom into the 1 hour time frame, and in the 1 hour time frame, we want to see the same thing. And as you can clearly see, I am not wrong. Price, let me put it around there. Price gave us that indication. So this is what we call indication. This. Now we are going to see multiple indications. Okay, let me indication. Let us reduce the to 12. Yeah, that is the indication. This is the indication because price has moved beyond a level, a significant level. Now, this now takes as the next significant level around here. We mark it. Why? Because at this area we have buyers. We have buyers. Then we want to mark the, so from this level of buyers, this level of sellers was formed. Now, what's next? We want to see price giving us an indication beneath this level of buyers. And as you can clearly see, let me clone this. As you can clearly see, what did price do? Price gave us that indication. Price gave us an indication. This is the indication. Now we want to mark that next level of buyers. So now that we have the indication, we mark the level of sellers that was responsible when for the we mark the level of sellers that was formed by this level of buyers, and the pattern continues. Now we mark this area, and you can clearly see, just as I said, what happened. Price buyers buyed into where they were previously for them to sell together with sellers, so that price gave us that movement. So what do we have around here? Let me read that. We have an indication around that area. Price sold back beneath this level. So this is the indication. You can clearly see, even if it's small, it's an indication. So we'll have taken trades around there, short position around there, stop loss there, take profit target maybe to this low. But we have now a new low. This is a low. The reason as to why I'm not considering that as a low, it's because the reason as to why I'm considering this as a low, it's because I said I'm not considering it in the past, but bear with me, sometimes tunakoseanga kidogo. It's because if you look to the left side, you will see that at 4658 we have a level of buyers. So we want to mark that level of buyers. And when I'm marking levels, I consider candlestick closures, because candlestick closures are deal done. It's a deal done. It's not weeks, but I've heard people are using weeks nowadays. So what I'm expecting price to do, I'm expecting price to come back. I'm expecting price to come back to that level to give us a new indication. So indications are now, this is an indication. This is a clean indication. But you need to look left if you do not see structure. And you'll notice that at this area, we have multiple levels. We have multiple levels. So I want to mark that is a level. Let's see. Yeah, that is a level, but it's not a significant. Now, if you have multiple levels in this situation, you want to ask yourself, which level is responsible for the formation of a new significant level? So in this situation, this low created a small high. This low created the first major high, but this low broke above this high. So this is a significant low. And you can clearly see, every time price you see at this level, it bounced up, up to the up, it bounced up. The last time price did so, it bounced up. So we immediately have our low, and this is the low. We're going to mark it. So that is the low. So this is another significant area. Now we have two indications. You have the first indication of that level, second indication to that level. That is how we go about indications. Now let us go to a bullish market, and I'm going to show you a major indication. So I can't get into this trade. Why? It's because of the session. But if you look at this, we had sellers, price is moving bullish. Let us start here. So price gave us a major level, which is this level of sellers, correction, correction. Then it gave us a first indication, correction, continuation to the upside. So this was the indication. This was the sign that price is bullish. Price now again made a level of sellers. Buyers are in control. So buyers from this level bought into sellers to break back above that, formed a minor indication. I didn't consider that as an indication. I did consider it, but I didn't consider the trade because it was off session. You can see it's 13 p.m. If you look at this, it's maybe in session, but I couldn't trade it because price hadn't broke back above this level. So look at this. Price gave us an indication. I didn't consider it because it was out of session, and clearly what happened? Price corrected. Now in this situation, this is the indication. From this area to that area, we are having an indication of price being bullish, because price is showing us how far it wants to go. Now that is the indication. Price has corrected. Now I want to zoom into the lower time frames to look at price movements. I can't get into any trade because the trades there's a trade. There's a trade. I can buy Nasdaq, but I'm not going to do so because price is off session. You can clearly see price gave us a mini indication correction. We would have executed buys around here, place stop loss maybe around here. Then we zoom back into the higher time frame, take profit target there to get a clean risk to reward ratio. But I'm not going to execute that trade. What I'm going to do is I'm going to actively monitor price in the correct session. You don't want to buy at the wrong session. Don't want to execute trade in the wrong session. So I'm going to talk about sessions in the future. That is a clear example of indications in a bullish situation. Let me show you another perfect example of indications in a bullish situation. This is Bitcoin. So look, sellers are there. Price gave us an indication. Sellers are here. Price has given us an indication, but this time around no correction to a level. So we mark the new level. This is the new level. Price gives us an indication. First indication, correction, they've executed buys here, stop loss here, put take profit targets around here, you'll be stopped out. Losses are part of the game. Price give us now the major indication all together. We buy around here, stop loss there, take profit target to the major highs. You can clearly see the pattern is clearly repeating itself. Indications, this is an indication. That is an indication you have bought around here. I'm mastering this game. You can clearly see indication. Price moves. This is an indication. I'm showing you guys indication. That is an indication. Now we are back to our last indication. I think in this example, we have an indication here. Price corrected back above that level. So I'm going to delete all this nonsense and show you my thought process. So we have sellers at this area. We had buyers at this area. I told you guys if by any chance price sells into a level of buyers, who are in control? Buyers. So in this situation, or sellers, I'm sorry. So in this situation, we're just patiently waiting to see price, how price is going to be. If price has give us an indication, correction, continuation, but now it seems as if price is correcting. So we want to see how price is going to behave. We just wait and see. Now in this situation, this is a significant level and we want to wait and see an indication above that level. Very simple. Very, very simple. So thank you guys. That has been an extremely long market analysis video. So what I'm looking forward today on gold is I'm waiting for price to correct back to this level. Let me delete that. Back to the original level, then we are going to take sales. As I told you guys yesterday, I looked at this and I was like, nah, if you ever see these two candlesticks, just know it's a reversal coming. But you can clearly see after this indecision, we had another candle. So I don't know what price wants to do. We just wait and see.